This video we will discuss Sukuk, what is Sukuk, its uses, and how it is different from similar products in conventional banking. But before that, I would like to thank our viewers and subscribers for watching and subscribing to our channel. Please subscribe to stay tuned to our upcoming videos. Coming back to Sukuk. Sukuk literally means legal instrument, check, a deed. However, in Islamic banking, one can say that these are financial certificates and are commonly referred as Sharia-compliant bonds. Though there are some scholars who state that the term Sharia-compliant bonds is not an accurate name for Sukuk. However, for our understanding, we can simplify and say that these are Sharia-compliant bonds. The concern that this school of thought has against calling Sukuk a Sharia-compliant bond is that the word bond implies that there is interest involved. Accounting and Auditing Organization for Islamic Financial Institutions defined Sukuk as securities of equal denomination representing individual ownership interest in a portfolio of eligible existing or future assets. Sukuk were approved as Sharia compliant in 1988 by Sharia scholars and various Sharia organizations. Here we will cover life cycle of a Sukuk transaction briefly. An entity, a company, or the government wants to raise funds. They create a special purpose vehicle. We'll call it SPV. The purpose of this company is to act as an issuer of Sukuk and trustee. The originator sells the asset against which they want to issue Sukuk to SPV. SPV issues Sukuk certificates. Investor buy these certificates and becomes Sukuk holder. Investor transfer funds to SPV against purchase of Sukuk. SPV transfer these proceeds to the originator. This completes the sale purchase transaction. Asset is leased back to the originator, who acts as lessee now. An ijara agreement governs this part of the transaction, and lessee pays rentals to SPV. SPV periodically receives and makes distribution to the Sukuk holders. Now the originator is working as an agent of SPV. At the end, originator has an obligation in the amount of exercise price. The obligator pays the exercise price to SPV to be able to buy back the leased asset. SPV distribute dissolution amount to the Sukuk holder to have the right to transfer the asset back to the originator. The asset is sold back to the originator, and that is the life cycle of Sukuk. Why we need Sukuk? Main objective of Sukuk is that of similar to bonds. That's how entities raise money. Secondly, there are individual corporations or governments with excessive funds, and for them, buying these certificates is a good investment. Historians state that the first recorded Sukuk transaction happened in 7th century AD. At that time, Sukuk was a contract to pay, more like a check. Since the approval of Sukuk as replacement of bonds in February 1988 by Organization of Islamic Countries, numerous countries have issued Sukuk to raise funds, and first one was issued in Malaysia in 1990. In 2000, government of Sudan issued a short-term Sukuk on basis of musharaka. In 2001, Central Bank of Bahrain issued Ijara Sukuk worth 100 million. And yes, there are types. Due to the relation of Sukuk with the supporting asset, one can divide Sukuk into 4 categories: asset-based, asset-backed, exchangeable, and hybrid. However, based on the supporting contract type, there are numerous types of Sukuk listed in the lower half. Details of these will be covered in separate videos, and for detailed training courses, you can visit our website. Differences between bonds and Sukuk. Sukuk carries ownership or part ownership of an asset, while bond is a debt obligation. Assets backing a Sukuk must be Sharia compliant. Pricing of Sukuk is linked to the value of asset backing the Sukuk. while pricing of bonds depend upon credit rating of the company or government issuing bonds. Sukuk distributes profits or share losses and can increase or decrease in value. Profit from bond is interest and the value is linked with the market. Selling Sukuk entails selling ownership of the asset that Sukuk has right to, while sale of bond is sale of debt. Just to summarize the differences, Sukuk is supported by an asset. The asset has to be Sharia compliant, and Sukuk is based on profit and loss basis. These three conditions contradict with the bond. AAOIFI has issued 2 accounting standards which cover Sukuk. FAS 33. FAS 33 supersedes FAS 25 and sets out principles for the classification, recognition, measurement, presentation, and disclosure of investment in Sukuk, shares, and similar instruments. FAS 34, which is financial reporting for Sukuk holder, prescribe the accounting principles and reporting requirements for underlying assets of Sukuk instruments. For detailed videos, subscribe to our channel, and for detailed training courses, please visit our website. Thank you very much for watching. Any questions, please email us. Subscribe to our channel for upcoming videos. Thanks again for watching. Bye for now.